What's up, guys? This is Joe, otherwise known as Catching BTC on Twitter. This is Bitcoin Watch number 8, where I do technical and fundamental analysis on Bitcoin's price action, as well as set price targets and expectations for the future. Alright, guys, so I just wanted to do a little market update on Bitcoin since my last video, because we actually have broken down since I last put a Bitcoin Watch up, and I just want to look at some key levels. And just look at what I'm sort of seeing and what I expect. So this is the trend line that we've respected very well. Just going through, I mean, we've had so many market turning points throughout the whole bear market. It's kept us down, kept us above throughout the whole bear market and bull market so far, and we're just sort of testing it now, and have been testing it for the past couple of hours, and we haven't really seen any reaction that I would be happy with, if I'm completely honest. So we might actually see a breakdown of this this trend line really being respected. You know, it has been chopped through, like here and here and here, but it's still worth having on your charts to keep in mind. But I'm just, this is going to be a quick one. I'm just going to go back and look at the levels again, put some fib extensions, some fib retracements. So I'm still actually looking at the same level that I was looking at a long time ago for this bounce in this zone here. But as you can see, we're quite far past the 50 moving average now, but we're still sort of within this liquidity pool that I had pointed out. So if we did Fibonacci sort of with horizontal support, so if you see this, we've got this top here, we've got this low here, here. So this would really be like the furthest I'd be looking for a market turning point to really happen in this liquidity pool. And then the top would really be just above this 382 Fibonacci, this peak here, and sort of supporting here. And we also have within that the 50 moving average as well as this trend line. So that is the liquidity pool, like the buy side pressure that we're really looking for, that we're trading in right now. I usually wouldn't have it as big as this, but it's quite broad, and there is a lot of buy pressure within this zone. But we really, this is why we've wicked into it in the first attempt, and now we're really trading into it quite deep now. So, it's not looking too healthy, but we still have this sort of last line of liquidity at this peak here. So I'm really going to wait to see what happens here. But a break below here, I wouldn't be too bullish, if I'm honest, but we do have this 100 moving average just below here. So if I was to look at the next sort of line of support for Bitcoin, using moving averages and horizontal support, a bit of Fibonacci, I would never take the long trade from the 0.5 Fibonacci, but in this instance, we have this moving average, the 100 moving average, which, if you see here, it's a very strong trend support for the past. So I would it's not my type of trade, just like this bounce here was just not my type of trade off the 15 moving average. It just wasn't something that I would have been happy to take. The trade from here was the one I was happy to take, and we had the best reaction here, and that's sort of what I look for. And the bounce off the 0.5 fib, it could be a strong reaction, but it doesn't work in my setup. I have to target 382 in a bullish scenario, or the 618 for continuation. In between the zone, it's good for picking up spot if you're bullish on the trend, but in terms of leverage trades, I'd only be interested in leverage trade in this liquidity pool here, which I'll draw out now, and this liquidity pool here that we're just about to break out of. So I'll just have a look at some key levels, because this zone has now got some pretty interesting levels in it. So if we just take the high here and the low, we've got the 618 there. We've got the 236 here as well, which, you know, also has the 200 moving average. But if I'm honest, I'm not sure I see us testing the 200 moving average. I feel like the move was so strong that to test the 200 moving average, you know, it would be healthy, don't get me wrong, but this early on in, you know, this bull trend, I just wouldn't really want to be seeing that. I'd want to sort of be seeing the touch of the 382 from the top, and sort of possibly a triangle forming and a break back up. I just wouldn't want to see it come all the way back down here. If I'm honest, if it does come back down here, I will be picking up more. But if I'm honest, I picked up a good amount, and I wasn't really looking to pick up more. But by the looks of things, the way this trend line hasn't really shown any pressure, or this liquidity pool hasn't really shown too much pressure since we've been trading into it. You know, I'm more keen on targeting this sort of level. But if we do trend down here, I will be looking for a leverage long 100%. You know, this is quite a high risk to reward because of the support levels here, specifically the 200, the 618, the 236, and I'm fairly certain we have a fib extension in here from the highs. Yeah, and again, guys, like I was talking in the last Bitcoin Watch, when we're in a bull, well, I think we're in a bull market. You know, some people think we're still going to 2000. I think that's ridiculous, but anyway. So when you're in a bull, or you have this parabolic trend and you're on the short side of this bull market, you know, you don't want to be looking for the 2618 extensions. You want to be looking for the 1618 extensions because, you know, you're counter trading the trend, which is up. So your short target should be more conservative, and that way that your long entries should be more conservative as well in a way, if that makes sense. So with that 618 just coming into the zone with the 618, the 236, and the 1.618, you know, this zone for me, you know, this is leverage long territory for me. And just the fact that, you know, we've had this test of this liquidity previously, but we sort of come back here, had a week, you know, let's take the top here. Yeah, so 618, no, so 382, yes. Hold on, am I doing this correctly? What line is that? Sorry, guys. Zoom that in, it's a bit easier to see. Yeah, so from the top here, you know, we've tested that 382, which is a good sign of bullish continuation. Moved back up, so sat above this 236. But on like the macro trend, this level hasn't really been tested again for a long time. So I'd love to see a move down here, if I'm honest, but I just don't know. I don't know if I see it. This would really be beautiful if we came down here, came here, and just came back straight back up, hit the 11,000 level. You know, really fuck the shorters. You know, there'd be a lot of shorts here. Come back up, reclaim this level, and continue the trend back up, or at least come back to the highs, sort of come back down again and move up. We'll have to wait and see sort of what plays out. And the reason I favored this, I'm still in favor for this zone that we're in right now. You know, I could still see us reversing here. You know, if I take these moving averages off and come in a bit closer, you know, the market structure, the way the market structure has sort of been built, you know, this kind of just makes me want to long this zone even more. So you can forget that sort of, if we make the liquidity pool a bit more defined now that we're trading down here, I'm just going to get rid of 1.5, there we go. So a bit more defined now. So if we sort of look where we found support, you know, sort of we look at the low from there and the high here. That's sort of where we're trading now in terms of the support we have. The market structure, you know, because we've had this. Now let me start back on the daily just to get my to make this make sense on the larger time frames. So the market structure I was looking at is, you know, possibly, you know, this is the first wave up, this is the second wave down, and this is the high of the third wave, and we come back down here to make this the bottom of the third wave, and we move back up. So that's the market structure, for the bullish scenario of this sort of layout, and something I'll be looking at. But then it becomes a complete different market structure as soon as this sort of high of the impulse wave 1 has been broken. This sort of doesn't make sense, and if we look at that again as well, so I'd have to come in on the hourly a bit to make this a bit more clean for you guys. So we've got this, within this impulse wave up, we've got this, we've got the sub waves, which completes a 5-wave retracement. And I'm looking at this. There we go. And then the market structure of this retracement after this impulse wave up is this ABC corrective wave, which now it's broken the low there. It's valid. It's still a valid market structure. And if we look at the descending channel it's kind of forming, if we were to get those lines sort of parallel, we do have a parallels tool, but I'm not too good with it, so that's should be roughly I'm looking at, and that's parallel. It's parallel to me, so we're kind of, that also offers another, this is a very invalid line, okay guys, this is a hypothetical line. Do not draw this on a chart and expect it to offer any support. It's a hypothetical line completely. The only things you should be looking at are these supports I've drawn in. But if it does happen, this ABC market structure is just so perfect for me. It's still bullish continuation within this impulse wave up, a healthy, nice 618 from here, I believe. Nice healthy 618 from here. So that I'd really expect to see a market turning point. But if we break below this, I just don't see it. It's possible we have a long squeeze and sort of come down here and move back up, but I wouldn't be long until we've reclaimed this level and sort of reclaimed this price level at about $10,000, and I'd go long on the $10,000 retest back up. So I'm just showing you the bullish scenario and why the market structure right now still favors the bullish scenario, and we don't yet know if we're going to dip below this price zone. But I'm going to take all these off, and I'm going to show you the support at the 0.5 fib, which I don't like, and I just wouldn't trade myself. But you guys can have a look at it and see what you want to do with it. So the reason I don't like it is because this 382 on the macro level is here, and the 382 of this well, sort of on the lower local, more local macro level is the 382 again. Sorry, this is the 382, and the 618. This is 618. Sorry, I've done it inverse. So this number here is 618, and this one is 382. So it doesn't really matter. The same thing. So that's why I like that. But when you come down here, there's no macro retracement fib level, and there's this local fib level, and there's this 382, and I never trade the 1.382 ever. I think it's a useless. I mean, I've never seen it really strongly respected ever. You want to be targeting these two here, and we've got this high here, but there's only really, I mean, if I put it in. So we put the liquidity pool in, and we look at the market turning points that have sort of happened within this liquidity pool. That's probably a bit higher up. There hasn't, it's been this market turning point, right? But then it's been chopped here, chopped here, chopped here, chopped here, chopped here. Market turning point. Short-term trend reversal, not really a market turning point, and we've chopped for it again 3 times. So for me, this just isn't a strong level of support. I just feel like if we break through here, we're going down here, and I just don't see any institutional buyers really stepping in here. But I can be wrong. This is trading. You learn, and sometimes things don't go according to plan. So we'll just have to see. But as soon as you break down the zone, I'll be targeting this zone for leverage longs, and I won't pick any spot until we're sort of trading near this zone. So we'll have to see, and I'm going to do another video now on the large caps outs just to see how this sort of favors this scenario as well. But I hope you enjoyed that, guys, and I'll talk to you soon.